Hello and welcome to FinextraTV's Thought Leadership Series. I'm Hannah Wallace, and kindly joining me now on the call is Richard Pears, founder of Responsible Risk. Hi Richard, how are you?
Yeah, I'm very good. How are you today?
I'm very well. It's great to be able to talk to you despite the circumstances. And we're going to be talking a bit about COVID-19 and its impact in the sustainable finance space. But before we do, I really want to sort of give our audience a quick recap of what we've been working on, because Responsible Risk and Finextra have been partnering up to create our latest series of events, SustainableFinance.Live. So where are we up to with that? Let's start there.
Well, we did our first event in December, and we had our next one due on March the 23rd, which unfortunately, being a very much hands-on and people-centric event, we had to postpone. But what we learnt is that participating, collaborating with a diverse group of people to tackle and embrace the challenges of delivering sustainable finance clearly works, and people have really got a strong appetite for it.
Because one of the main aims we've been working with through the activities is sort of debunking that myth that value can't be created by meeting sustainable goals, and to show how revenue could be generated through trustworthy implementation of ESG measures. So my next question really is, what was the turning point for people's perceptions and view on this then?
Yeah, well, I think BlackRock have spoken about this in the Larry Fink letter, which is that they've signed up to the understanding of climate risk for quite some time, but what they really needed to know was that it wasn't just about values; it was about value, and that the evidence is in the latest Larry Fink letter. They've said that climate risk is investment risk. And they are doing everything they can in all of their thought leadership to actually, as we build back better after COVID, to actually make sure that people are focusing on sustainable investments. And the final evidence is, which will take some more time, but actually we've seen a lot of dropping red lines in the stock markets, but actually the ESG funds have held up quite well as far as the initial evidence appears to show.
And of course, we've together been speaking to a whole range of people on the front line of sustainable finance and pushing these goals forward. And we've heard a lot of examples of how technology is being used, but also the role of data in these ventures. So I suppose from those interviews and our coverage, what have been your key takeaways and the lessons learned?
Yeah, I think there's, it's a really complex area, but if I try and sort of break it down, there's kind of two ends of the spectrum, really. One is the work that's been going on with about the taxonomy. So the EU, leading very much with wanting to be a green economy, has said we've got to have a taxonomy. So that is, what is green? What are the 50 shades of green? And how do we scope and size that? And then how do we work with it? You've then had things like the TCFD, which is really talking about the governance that boards need to assign people and work on these in certain ways. So when you have a definition, you know how to work on it. And then the reporting around ESG, and then what investors can do with regard to things like the Transition Pathway Initiative to use tools to actually look across then those things like the EU taxonomy and the TCFD and even SASB from an accounting point of view. So you can see there's quite a lot of complex building blocks which are coming together. And then on the other end of the spectrum, we need to bring in, better quality data from the real world, not just from, me reporting about myself. We need to know the evidence of what I'm actually doing, and that's coming in from supply chains. And that's using things like Internet of Things, and then obviously blockchain, artificial intelligence and machine learning on a global scale.
And homing in on the use of artificial intelligence then and machine learning, have there been any use cases that have really stood out for you?
Yeah, it is early days, but the one that I talk about, because it's in the public domain and people can go and sort of look at the reference, was one that was done by APG, which is the Dutch pension fund, working with Robico. And essentially what they did is they, almost a couple of years ago now, they sat down and said, look, we want to get into this world. We need to understand the book of assets that we've got, and we need to understand, the brown and the green and the 50 shades. But at the minute, nothing is classified, nothing is tagged along those lines. So how do we figure that out without looking back through every single record that we've got, be that paper-based or digital? So they used machine learning and tagging to go through the whole of that system. And obviously, as it gets faster and faster, they started to identify the various assets that they were looking for. And they have a nice headline where they said something like, "We were looking for, one new Tesla, if you like, as a personification of green, and we found 52." So they felt that getting that baseline on their asset allowed them to understand their risk and then also identify the opportunity. And then they allocated billions of pounds into those green assets, which were the ones that they were trying to identify. So that whole story is up there and written, and we can post that link to people. But that's a great story. And I think, in summary, everybody in the financial services industry has got to baseline. And so this technology can really help them with the identification and baselining.
And of course, ESG stands for environmental, social, and governance. And I want to home in on the S and the G of ESG. How do we take into account the societal and governmental side of things?
Yeah, well, it's pretty tough because, we can measure climate change and we can see parts per million of carbon in the atmosphere, and it's measurable, but it gets harder with the social and government side. But I think this is where people talk about conscious capitalism or responsible capitalism, which is really measuring the triple bottom line. Right. And that is measuring in accounting terms not only the financial side, but the human and the natural capital. And so, although that's very clear, it's still very hard to do. And I always go back to that great story of Ocean Mind, which we've told a few times and people can reference. But that was a story of satellites looking at fishing fleets in the deep ocean. And you kind of go, well, that's fine. I can track fish. That helps me a little bit there. But one of the key messages that came across was that they could see that small boats were taking their catch to large boats, which were allowing them to stay out at sea for 3-4 months at a time. But it was clear, if you look at that signal, that probably meant there was slavery going on those small boats, because there's no way that they could sustain in good working practice people working in that environment for so long. So if you measure these things, you can use these tools. So then when you actually talk about landing that catch and putting it through the supply chain, you're actually also being able to measure if it's not just sustainable fishery, but sustainable fishing as well, and obviously what's happening to the people and the natural capital.
All right, well, that links us back to the Covid-19 pandemic, doesn't it? Because as we get closer to the natural world, we're seeing more of an outbreak of these zoonotic diseases. So how do you think Covid-19 then is having an impact on sustainable investing?
Yeah, I think it's a really good question. And clearly what we're seeing is a response in the markets and from governments at the moment to deal with the immediate crisis. But I think if we look at it, what people are learning is the meaning of this word exponential, which is how fast it's moving around the world. And it's very, very real and visceral for all of us. Climate change is something which is, it seems to be, we've heard about for a long time, and it's a little bit further away. But actually, all of the same conditions are in place for this exponential crisis to unfold. So I think in the sustainable investing world, what people are talking about is that we really have to make sure that these things we've discussed in this call, triple bottom line, taking into account the natural, the people, and the financial capital, truly have to be managed all the way through the system, so that we build back better is a phrase that's being used. And essentially the data tools that I spoke about, if you think about that, again, that Ocean Mind example, there you were talking about people fishing and getting close to wildlife in the deep sea, potentially with slavery going on. But for the first time, being able to actually understand that behavior and put that into the governance processes of a supply chain and an organization, which can then be invested in or not, as the case may be. So learning about this crisis hopefully is a wake-up call. We're then seeing that we do know that the methods people are taking forward in sustainable finance are going to help. And then we have got the tools which can perhaps stop us from interacting in ways that are releasing some of these viruses potentially. So we feel as though there's a lot of, if you will, very unhappy validation of what will come forward in sustainable finance.
And as you say, why keep cool? Well, Richard, I could keep you on the call for a lot longer, but I'll leave it there. Thank you so much for joining us today.